Alrighty, Wednesday, March 10th. This is the nightly video, and this is Taylor. So hope everyone's having a good week so far. Couple more days to finish out strong. Let's take a look here at the volatility index. So y'all know as of late, you get the big pump in volatility, and that results in a little bit of sketchy action there for the market. S&P 500 certainly has held up much better than tech. And those tech names, they've really been taking a beating here. But if we look at VIX right now, there are some positives. We have seen the volatility index slip back under its 21 EMA. Potentially, that might be the end of it. Now, of course, the market's going to do what the market's going to do. And by all means, we could wake up tomorrow and volatility is just pumping away again and the market's rolling over. But this is kind of the first constructive step to seeing an end of the selling pressure. As long as VIX is pushing higher and higher, you tend to get more downside. And not until VIX dies back down and ends up right back under its 21, can we start to kind of seek out those clean setups and look for those clean directional moves. So I think for those who have been patient here, you're getting VIX dying back down, and for the time being, things are looking a little bit better. Just as important as volatility is the overall structure of the market. So if you take a look here at the S&P 500, this actually looks really solid. And even with a little bit of volatility last week, compare this to technology, the SPY held up phenomenally, mainly due to all that rotation into the financials, into the energy sector. The transportation sector is hitting all-time highs. The industrial sector is hitting all-time highs today. So if you look at the S&P 500, just a big basket, the biggest 500 stocks in the market, you've got your tech stocks, you've got your financials, you've got your energies, all those different, call it, sectors within the basket. The basket itself is holding up all right here because of the strength in the financials, the energies, etc. It's really technology right here that's being a bit of a drag. So unlike the S&P 500, I don't think we're out of the woods quite yet when it comes to technology. Reason being is that still, nice looking move today, but close but no cigar. Even with the nice move here today, we're still seeing tech trading under that daily 21 EMA. And as long as we're under that daily 21, what we're going to tend to see is just that kind of clean rhythm of reversion to the mean, but to the downside. We're going to move a good 2 to 3 ATRs to the downside, get these big rips right back towards the mean. But if we're not closing back above the moving average, and especially as long as your histogram is negative, that move back to the 21 typically just gets stuffed and you're rolling right back over. And you tend to roll a good 2 to 3 ATR, and you come on back home, come on back down. So with a nice pump here today, it's really all we got. Nice move back to the 21, we got stuffed, and things kind of faded off from here. So S&P 500 versus the QQQ, the SPY has a much better structure. Stacked moving averages on the daily chart, you got some nice exhaustion coming in, and we're back above the 21. So it's a combination of the index with a couple solid closes back above the 21 and that volatility index dying down that leads me to believe as long as this picture stays true, we can more comfortably start to seek out some good looking setups. But keep in mind though, there's going to be things like Draftkings and other names out there that don't really care what's going on in technology, but when it comes to trading the Apples, the Facebooks, the Amazons, I still think you want to be a little bit patient. Until the Qs are back above the 21, you got to be a little bit suspect here that any big rip might just be a reversion back to the mean before we get stuffed and make another leg to the downside. So the S&P 500 looking pretty solid. The Qs, I think you continue to be a little bit patient on those tech names. But with all that being said, let's take a look at a couple of clean setups here. So Draftkings is just going beast mode here today. So interestingly, couple of weekends ago, I'm looking at Draftkings, and this is just picture perfect. You got this squeeze, we're holding above that 21, you got stacked moving averages. So I'm just fantasizing all weekend about jumping into Draftkings, and early Monday morning, it just takes off to the races without me. So one of the most important rules to respect as a swing trader is that if you're going long 2 to 3 ATRs above the 21, and that's what this Keltner channel is measuring, if you're going long at that point, you're taking your entry right at the moment there's a growing probability, we're going to lose steam or we're going to roll right back down. So unfortunately, you got to kind of pick your poison. You know it's extended. You can jump in here and chase. This is a danger you're facing though, is that you're chasing it, you're getting in too late, and it pulls back to the 21. So by not opting to chase that there early on Monday, I said, let it go without me. If it comes back, it comes back. And sure enough, it did come back. So Draftkings, you get the nice pull back to the 21. Solid move back above the mean yesterday. That was the entry. You get the pull back to the buy zone. Now you got a good structure, but you're getting a much better entry versus chasing it at 2 to 3 ATRs. So for Draftkings in the options room yesterday, we jumped into an April expiration put credit spread, but with a 11.5% today. So this thing's just going. So with the big move here today, we're pretty close to collecting a good 50% of our max profit. So we got an order set here to buy that back at a nice profit. And we also got a little bit of Eli Lilly here. So let's get the squeeze up. So it's a matter of respecting the overall environment, being patient enough for the environment to get a little bit more conducive to, finding clean directional trades, but then a focus on the structure of a setup just like this. For me, this is all I'm looking for. A good tight squeeze, holding above the 21, stacked moving averages, green 10x bars, positive histogram. This is picture perfect. So we got a little bit of Eli Lilly here. Google, even though I was just bashing tech there, Google looks phenomenal. So, the potential risk of Google right now is that if tech just keeps on rolling lower, I'm not sure how long Google's going to be able to buck the trend. But if you compare this, at least for now, to Amazon, Apple, and Facebook, this looks absolutely awesome. So for Google, we did jump in here this afternoon with an April expiration put credit spread selling the 2000 strike. And in a nutshell, this is my entire approach to trading, and this is basically all I focus on during my time in the options room. It's mixing probabilities with probabilities. So with Google here, I think I found that moment in time where this setup, based on the structure, the squeeze above the 21, all that good stuff, I believe that the probabilities here of a move to the upside are pretty damn good. To put the probabilities in my favor a little bit more, I'm going to sell an out the money put credit spread, basically placing my bet that the stock doesn't move the complete opposite direction. So you wait for that clean squeeze, you're waiting for that moment in time where a stock is building up energy, getting ready for that potentially bigger than expected move, and then you sell some options in the opposite direction. So for Google, we are strapped in, April 16th expiration put credit spread, sold the 2000s, and then bought the 1990s. So these are good, clean setups. With the recent sell-off in the market, these are the kinds of things you want to focus on. In terms of probabilities and in terms of, the path of least resistance, you look at something like an Apple, it's going to take Apple quite some time before this can clean itself up again. Before we're back above the 21, before we have stacked moving averages, sure, there's some potential money to be made trading Apple to the upside, but I think finding those stocks that have held up like a champ with that good bullish structure, those can lead to easier moves.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me